Thank you, Sean. All right. Welcome. Thank you for being part of another episode of RM Smart Investing. Uh, every week I say I really look forward being part of your an hour and a half spending together. So I'm so grateful that you are with me, and it's been a beautiful week here in Southern California. So this is a nice Saturday to actually be inside now. But anyway, I hope you're all healthy, well, wherever you are. And what like to do this week, as always, what we're gonna do, we're gonna review the economy, and we'll spend some time on the markets. I'm gonna spend a little bit on the whether the stock splits matter. As you know, Monday is Apple and Tesla. They are doing their split. So we will do a little study on what happens. Spend a little more time on the commodity of the week this week. As I've mentioned, we want to go outside the box and spend more time on some alternative investments. Briefly, we talk about the trade of the week. I'll talk about expected move for the S&P, SPX for the upcoming week. And then I will have like maybe a couple, 2 or 3 minutes on final thoughts. So let's start with the economy. As you know, I like this, and I like to keep the pattern going, looking at, again, under the hood, what is happening with the engine of the economy, which is really the businesses, the activities, especially with the hotels, the traveling. The box office receipts have not obviously moved at all. The sporting events. We look at the unemployment, initial jobless claim came, and what we want to do, we like to see the trend. As you know, when we compare it to a year ago, obviously everything is red. We are all aware of that. But what we like to look at is what is happening week over week, what is happening month over month. So a couple of interesting things happened last week. One was the health related, and of course Thursday, Jerome Powell, the Fed chairman, I call him Uncle JP, because he's really the uncle who's managing, especially our economy in a sense. And everybody was anticipating from Jackson Hole and wondering what he's going to say. Nothing really different. He is going to take care of us. He's watching, and he's going to. One thing that was interesting, though, the question of the inflation came, that they're going to try to watch that, promote that, although their emphasis was they want to grow the jobs. And in my opinion, they really don't have to work on the numbers of the inflation as long as we get the jobs going and there's earnings, and obviously the concern about small businesses. The inflation will make it healthy for us. We don't want to be another Japan, from 1980, 1990 and on, which they're artificially just constantly trying to produce the inflation of 2% with manipulating the currencies and doing, bond buying and exchange traded fund buying. And speaking of Japan, it's, Friday, Prime Minister, which was the longest serving Prime Minister of Japan, decided to resign, and basically based on his health issues. So we'll see what happens with that. Now, the second part of last week was, and it started Sunday night, this studies done with the plasma, and when you woke up on Monday, the markets had positive reaction. And then Thursday, we had Abbott Labs came with their $5 testing that allows, it's much shorter instead of doing the thermometer. They allow you to do testing, and the market really reacted positively, and immediately you can see that it didn't jump as much as you would think, because you can see the prices have been in some of the plans that they were doing. But if you look at the volume, when we look at the volume, we can see that let me put the pointer, you can see that it went from, it jumped to 111, $12, 110.79 was closed on Friday. How does that affect? Obviously, it affects the traveling plans, the leisure um, industry. The way the testing works, it seems like for the flights under 12 hours, it's or the contact with anyone within 12 hours, it allows you to to make sure that it's not contagious and you not get it. And so basically, the test, if it's negative, it's important for the airlines to allow you to get in, and obviously you have to wear your mask still, but it gives a little more reassurance. So what I want to look at is, this is what the reaction was for our industries. And you can see this is for the past week. You can see the number one mover in our industries was airlines. For the week, they were up 11%. And then travel services were up nicely, about 11%. REIT, which was a hotel and motels, lodging. And so there was a lot related to, again, the movement and the traveling. So that was good news. I don't know how far sometimes we really extend it, but we'll see. Hopefully it has some legs, and this will give a little more confidence. In the meantime, obviously, all the companies are working on vaccinations, which could be a long-term solution. Right now, the way it looks like, the markets are really taking everything to the optimum. They're pretty positive. They are thinking that everything is, they've kind of discounted everything, and they are really looking at the optimum results. Although, again, with vaccination, I know at least 1/3 to half of the population have refused to take any vaccination. The good news is, what we'll have is, there's a lot of technology, a lot of private companies are working on solutions. There's a new technology called FARI, which is the ultraviolet lighting that they use in the hospitals. They are working on a superbug, killing the superbugs and all kinds of viruses on the environment, and it's safe. And so there are things that the UVA technology and other companies are working on. So these are all the positives. So I've said before, I mean, we are in a challenging times, but that doesn't mean that we have to give up hope. So we are human beings, and we are very much resilient. So things will change. It's just going through next year or so will be the big challenge. So again, I'm positive, except we just have to look at the short run and be prepared for the setbacks. But in the long run, things always work out. So one of the stocks that we followed, it's like MGM. As you can see, the reason I show this is, you can see it's a nice breakout above the trend line. You see we just broke above the 200-day moving average. So there's a lot of news coming up on MGM and the WEN, and as I mentioned, some of the airlines. And that's was again related to Abbott, and also obviously MGM knows the problems ahead. They had furloughed a lot of employees, but then they decided, I believe they're going to let go of 18,000 employees. The same thing with American Airlines. Since I'm talking again about the MGM, this is something I want you, again, do your own investigation, do your own research. In the past, I've talked about the insiders and what I believe. This is from Finviz, and again, it's a free site. You can see that the activities of the insiders. And one of the most important things I look at is who is the one especially buying. And I put a lot of value on the CFO of the company. There's a lot of directors, a lot of 10% owners. Sometimes the CEO comes and plays sometimes games. but normally the CFOs, they know the finances. So this caught my eye a few months ago, and I might have talked to a few of you about that. And it, at 1196 and again at 1208, it was really interesting. Within a couple of days that the CFO started purchasing. So as I mentioned, insiders, I like to see a pattern, someone that who hasn't done anything and all of a sudden shows up. I put more value on the buying side than the selling side. I like to look at, again, more of a um, coherent effort on all angles. Here we had the president of the commercial growth, then we had directors, we had the CFO, we had the president. So these are the things that, you know, caught my eye. So it's not a bad return when you were here under, and then they started buying here, let's say from $10 to $23. That has been a nice ride. Let's talk about the markets, because again, last week was pretty active market. Again, there were a lot of news came out. Usually you have the doldrums of August. What we see is historically, again, I've never seen things like this. Historically, August is very slow. If there's any bad news, it comes in August. There's a downgrade. S&P, there was pigs, European. So it all happens. This year, I don't know. I mean, especially Europe in August, it's especially continental Europe, they're shut down. This year, well, I don't know if there's a lot of traveling going on. So historically, after the Labor Day weekend is when really activity happens and the real investments start. This year has been unusual, and we had a slow week the previous week, but this week we had a little more activity. So what happened last week? In the Dow Jones finally went to the positive. We hit the past the zero even number, and we were up 2.59%. S&P 500 was up nicely, 3.26%, up 8.6 for the year. And then the NASDAQ, obviously, it just continues this unbelievable run with its few stocks. It's up 30% for the year. When we kind of break things down, we see the only negative there was the utilities, which are obviously they're more defensive, but also it's interest rate, very much interest rate sensitive, which next I'm going to talk about. What we want to watch this week, which is crucial, is the bond market. The small caps, S&P as mentioned, they were up 3.26%. The small caps and the Russell 2000, they were up, but they weren't as, up as bullish as we've seen the big caps. And a couple of reasons, although the financials were up, but in energy stocks and smaller companies, they did not react as favorably. One good thing was the advanced decline line compared to the previous week. We were on the positive 2 to 1 approximately. Dollar went down, and consequently, when the dollar went down, we had the gold going up, and crude oil was up a little bit. But I want to emphasize this bond market and what's going on, because the rates have gone up quite a bit. We went from 5.2 to almost like 7.6 in a matter of a couple of weeks. So it is, obviously it affects the mortgage rates. It affects a lot of company activities. And we want to see what Uncle JP is going to do about this, because they've been really macro managing the whole thing. And they've been looking at, managing the yield curve. And we'll discuss that. So a couple of, again, the psychological things we look at. This is one of the highest I've seen. We had 1.13 on the euphoria, and this is from the Citigroup panic and euphoria model. This is a very lagging indicator, by the way. So when they look at, let's say, they look at what happens 12 months down the road. So with this, they predict that we will be, once we break above about 0.41 is their criteria, usually that's the markets react negatively a year following that. That's just an average. And when we are down below -17, then there's panic, and if you want to be a holder for next 6 months to 12 months, that's a good time to be in the markets. Also, with the CNN's Fear and Greed Index, which is looking at the 7 factors, we see that's extreme greed at 78, and that shows that, and there's a lot of complacency, and I follow the put call ratio. It's one of the lowest I've seen, so there's extreme greed there. Again, these are lagging in a sense, not lagging. What I mean is not very short term. But it takes a long time to come to intuition. As I mentioned last week, almost everything was positive except the utilities, but you can see a lot of cyclicals and economy sensitive sectors were up. Financial, they had a nice up day again because of the higher bond yield. That helps them. The consumer cyclicals and communication service and technology, they have their own world. So you can see real estate was up and industrial. So this is what's happening with the 30-year bonds. This is where we were beginning of August. And since then we've had, it's been the downward. So we are in crucial points. So let me look at it. This is a little easier. It shows us our 30-year bond, and we are in a box. If you notice, for the last few months, it's crucial we hold this. Otherwise, then we have to look at 171 in that. I mean, in bonds, and then we have to be also be concerned with the mortgage rates, how it will have effect on the housing sector. So I would say Monday is an important day. This looks like a large wick or the tail. So if we have a up candle, it's an up day, then that should be positive for the market. So we will watch what happens on Monday. Now, a couple of things about Monday. Monday is the last day of the month, and usually a lot of things happen on the last day of the month. It's Monday, as you know, it's my least favorite trading day for me. So a lot of things happen on the weekend. So I don't put a lot of value on Mondays, but Monday is important. You also have to remember a lot of portfolio managers hedge fund managers have done well. Sometimes they get their bonuses based on, obviously they did it on the performance. This time, maybe if they want to take some profits. On the other hand, beginning of the month comes, if they sold something last few days, they want to put that money back the first 2 days of the month. So the 1st of September, 2nd of September, things start moving. Before Labor Day weekend, the holiday, usually the markets go up. But as the whole month of September is not the prettiest month. And if you notice, it's one of the probably second or first, sometimes the last 20 years, it's one of the worst months. The Dow has been down 10 out of 17. So it's something, if there's volatility, it's going to happen in September. So again, just be concerned as far as being cautious. But as you will see in the next slide, or by the way, this is the TLT again. You can see there's this candle. It shows that there is a pause. So hopefully it will might be turn around. But look at the SPX. I mean, this is a beautiful chart. You can see the 20-day moving average is above 50. 50 is above 200. We are comfortably above the 20-day. We might be running a little away from the 20-day and 20-day above. It's running away from 200, so we might need a pause. But there is no, I would not short the markets. I might lighten up again in some positions, but this market is not giving us, at this moment, giving us any indication that you should short it. We will look at some other things, but like the volatility was up last week, although the markets were up nicely. So we're getting a little contradictory information, but I need to have confirmation before I start shorting the market. You can maybe start, if you want to protect yourself, maybe buy some put options, but I would not, go ahead and short the market. So, but this is where we are. We're still not completely overbought in RSI yet. Anything over 70, it sounds like it, but if it goes over 80, then it stays there. That means there's still enough momentum to continue with this direction. The same thing with NASDAQ, as you can see, beautifully, nicely above the 20-day moving average. We are running away from the 20, so you can see we are resting last 2 days. It was a resting day, and every time there is some kind of a running away from the 20-day, we like to come down and kiss the 20-day moving average. The financials were strong last week, but now we are back to the 200-day moving average, which we failed last 2 times. So this is something you want to be watchful. Again, next week is important, and I think the bond market is going to dictate the directions where we are going to go. So again, the concern about banks have been, especially the commercial real estate as far as the mortgages and what's going to happen with that. So they have put a lot of reserves aside. So that's something, again, next week we have to watch the bonds and the financials. So this is almost like a wedge. You can see it's narrowing, and this is, so it is crucial to see which way we will break out. I thought, we talk about technology, we talk about excitement, a lot of different things. I want to share this chart with you with the big lots. I mean, big lot, who would have thought? Yet, they are a retailer, discount retailer, and look what they did. I mean, they were under $12, and they hit almost $55, almost 57.5 last week. So they had a sell-off, but this is a beautiful chart. And so companies like that in this environment, they have been thriving. Right now we had a big drop there. We'll see if we hold that 20-day moving average. Another one that I mentioned last time was, and they do hot sauce. And what they've done, they have actually come with the basically working with AI, IBM. They're trying to work on the marketing side, and that's what they have been working on. And look at this nice chart. So that's McCormick. All right. Okay. Maybe before I do that, Sean, I just want to ask, can you hear me well, Sean? Can you just tell me if everything, yes, you can see? So everything is good. Okay. Just had a little, all right, thank you.
You're welcome.
All right. Do the stock splits matter? As you know, well, last Monday, you're gonna open your charts and look at the Apple and Tesla and see, oh my God, the prices have gone down tremendously. And as you know, Apple has 4-1 split, and Tesla did 5-1 split. And basically, why we haven't seen many of them, and how does it affect the prices? And that's what I'm going to review in this segment. Do the stock splits matter? Going back in history, as you know, I like the history. The number of New York Stock Exchange splits rose by 41% to 35 between 96 and 97. You have to remember the 90s, especially late 90s, was the internet era. And there were so many companies moving up and going so expensive that they were actually trying to split, and it was, I believe, in 1999, it was like 100 out of 500 S&P stocks. They actually did the splits. So it was a very common theme at that time. And it continued 98 and 99. And again, S&P looked back and looked at the number of the splits per year since 1980, and they came up with the average number of about 45. And in 1986 was the highest. 1999 we had one again close to 100, and then it slowed down. So you would think in the bull market, because the prices are going up so fast, what will happen is you will have more splits. But in the decade of 2010, we really haven't had much. As a matter of fact, in 2007, we only had 5 stock splits. So how does that affect, again, the price, the future? Does that mean anything? I mean, is this just a gimmick? Is this like Apple is trying to do something? Will more companies follow this? So let's review that. Number one, as far as the fundamentals, as you know, nothing changes. It doesn't, the market cap stays the same, the earnings, everything, the company goes on the way it has been. It's just you have multiple of the shares have been just split. So instead of you having, let's say, 1 million, now you have 4 millions of shares. So the price is cut in 1/4. So in many ways, it does not affect anything. The company's fundamentals stays the same, the debt, the earnings, the sales, they just continue. From point of view of the fundamental analysis, it really shouldn't change the pricing at all. So fundamentals are the same. So majority of people say stock splits they have no effect on the prices. All right. But you know, we are not rational investors, or humans are not rational all the time. So we talk about perception. And what happens with perception now, here I had a $500 Apple stocks, and Monday comes and it's 125. It makes it more attractive for me as an investor to get involved. The same thing with Tesla. So this was the effect that in, again, 1990s were happening. A lot of stocks were going over $100, and then they were immediately doing the splits to attract more investors, because that would actually, with more activity, that meant higher prices. With higher prices meant higher market caps. So in a nutshell, one of the main reasons in the 1990s you could see a lot of activities with splits was because, remember, many of you might not remember, but there were lots of commissions we had to pay. So the lower the numbers, the odd lots, anything under 100 shares, the brokers would charge us 2 to 3%. On the other hand, over 100 shares, it might be about 1%. So what was happening, a lot of retail investors were shying away because they didn't want to pay larger commissions and a higher price, but also sometimes they couldn't buy those stocks. So what happened was this became, again, a gimmick that a lot of these companies would, as soon as they went over $100 or close to 200, they would split their shares, so it will attract more retail-oriented investors. And what happened was that's what you could see then. You fast forward to today's world where you almost have no commissions, the odd lot, no odd lot, it really doesn't play much of a role. And that's the reason you haven't seen many splits in the past few years. Also, more and more brokers are offering fractional shares. So with fractional shares, let's say you have Amazon at 3,400, you want to have 1/10 of it, you can go ahead and buy it. So because of that, then the affordability is there. So that really is not attractive. That's another reason we haven't seen many splits. On the other hand, on the positive sides, why, let's see, what Apple did, With options, I think this is going to be helpful for, again, especially for the retail investors, especially if you do any kind of covered calls. I just use that as an example. As you know, one contract of option equates to 100 shares. So here, if I want to covered call on Apple of 500, now I could do, depending on what I want to, one contract, I had to have $50,000 worth of Apple to do one covered call. With the split, it allows me to do 4 times that. So it allows me to be more flexible. If I want to do any type of, again, spreads, we have smaller, um, as far as the exercise or expiration, the strike prices could be narrower. So these are the good things. So for the options activity, the stock splits definitely are helpful. So that also allows more and more activities. Believe it or not, options market do dictate a lot of stock prices because of, again, market makers have to cover when they sell something they want to have in their inventories. So the more active retail investors are, the more active the market makers have to be. So that's how stock splits do affect the prices of the stock and the activities with the options. The volatility also goes up. And one of the reasons in the past, if you notice again, we haven't had many stock splits in the last few years. And yet you have from Chipotle to Amazon, Netflix, a lot of large companies, Berkshire Hathaway being the largest, they really didn't want to do splits because they know the larger institutions are the big investors. And because of that, they're more of a long-term investors. So you don't see this volatility. And that's why they've shied away from doing splits. So in this occasion, again, Apple and Tesla saw something that, again, they want to get more retailers involved. But a lot of investment companies, a lot of because they do a large volume, they like that. It's more predictable. So that's one of the reasons that they haven't done much stock splits. The last but not least is the performance. So the question is, if fundamentally nothing changes, everything stays the same, after the stock split, what happens? We know from when the news comes out from the stock split till the split, there's a big run. So I will show you in the chart what has happened, let's say, with Apple and Tesla. What happens after actually the stock split has performed and they're already done? And there was the dean of the business school in University of Colorado. He did a study on, his name was David Eckenberry, and he did a study on stock splits and went back in the history. And this was done in 1990s. So just take that with a grain of salt in the sense that there was a lot of stock splits happening. But nevertheless, the fundamentals of the idea stays the same. So he looked at that and then he found out that a lot of stock splits, they do have a positive effect up to 3 years. So the biggest effect stays, they do outperform the averages, usually by about 3.6% per annum. So that's the alpha. So per annually, they are outperforming. And that was the finding. So in this situation, again, with Tesla and Apple, would Amazon follow? What other companies? I don't know. But this is what the studies tells us that yes, even though nothing changes, even though there is no fundamental changes, the performance tends to be better for the companies that they do stock split. Now, on the other hand, also I have to mention that like there's usually some other good news comes out with these companies. As you know, is the Tesla has this battery day on September 22nd. Apple is coming with the new iPhone. The news hasn't come out. So these are the things happen with the stock splits. just, I don't know if you recall, on May 1st, what happened was Elon Musk tweets this and said, Tesla's stock price is too high, in my opinion. So this is what happened to the Tesla stock. It's ironic that it was May 1st, 5-1. So obviously he had these plans. I mean, some of you probably have seen this, but he had a plan of 5-1 stock split. And he is an interesting guy. So he is definitely visionary. And here he is. On May 1, he kills a lot of investors at that time. I know a lot of people are tweeting how much money they lost because of this just tweet. But anyway, so I thought that's interesting to see. But looking at the movements, I mean, look at what has happened to Tesla on a weekly basis. This week was up about 8.5%, and Friday turned around toward the end and down. But the previous week was up 24.2%. This is per week. It's up like 66% since the announcement. So it's and the earning report. So it's been unbelievable, again, performance. I had shared this with you before, but I'll share it again. The Apple stock has split 4 times before this one. They had a 7-1 on June 9th, the last one. And before that, they had done 2-1, 2005, 2000, and then 1987. So we've seen the effects, and I'll show the chart again. I want to share that with you. One of the effects that obviously it will have is, again, with the Dow Jones Industrial Index being the price, using the divisor being the price-oriented index, the Apple being from the leading component of Dow is going to drop to maybe 16, 17 at $125. So it's not going to have as big of an effect on Dow Jones index as obviously it has effect on S&P and NASDAQ because they are market cap oriented, and this is a $2+ trillion company. And I just shared this. This is what happened to Apple in 2014 for the next year and a half. And this is what is as far as the S&P did. So just a food for thought. I hope that kind of helped you understand what happens with the stock splits. All right, let's work on the commodity of the week. Last week we spoke about agriculture and specifically corn. So I thought since we've spoken about gold in the past and the precious metals, let's continue with the commodity of the week. And this week I'm going to talk about platinum and whether there's opportunities in investing in platinum. First of all, why platinum is important and little facts. Believe it or not, they are a very, very precious metal. They are 30 times rarer than gold. And what I mean by that, if we gathered all the platinum ever produced, it only will cover your ankles in one Olympic-sized swimming pool, just your ankles. On the other hand, if we did all the gold, it will fill the 3 Olympic-sized swimming pools. So that's the difference. And because it is really rare, precious metal, it's called white gold. It used to have be a lot more expensive than gold in the past, but it has been lagging, and we want to investigate that. So first, let's talk about what are the main uses of platinum. The biggest usage for platinum is in cars. We call it auto catalyst. And then basically what it is, it's that the cylinder that they use, from engine to muffler, what happens that the exhaust that goes, imagine how much pollution there is. And these are the catalytic in converters, so they purify that. So that's why they stop the pollution. They've been around since 1974s. The Japanese and Americans have been using it a lot, and they're in like 95% of the fuel oriented cars. They've been using this, so it does have that usage. It's averaged in 2019 it was 34.3% of the usage of platinum was for the auto catalysts. The 24.9% are in jewelry, and we will discuss how that affects. With the jewelry, again, it's with weddings, especially in India and in China. These are important as far as the jewelry goes. Now, we will look at the future and see why the prices have been affected, and then we look at it, what is the jewelry's effect on the price. As far as the industrial goes, they are involved with the chemicals, petroleum, they do electrical, involved with the fiber optics, they are involved in actually biofuel, the petroleum, they actually are part of the cylinders that are used in the explorations. So they are industrial, also metal. So they about 22.94% is usages in industrial. Medical and biomedical also uses approximately about 3%, and they use it in dentistry, they have it in a stent, they use in industries also, they use, by the way, the fertilizations, fertilizers, and then in biomedical, again, they use it in the cancer research, some of the things that they use. So they are pretty diverse usage. And as far as the investments, they are basically, we look at in 2019 compared to 2018, there was 3.33% change in positive way in bars and coins, and then exchange traded funds holdings have increased 11.76%, which represents 15.1% of the usage. So these are the reasons for the platinum to have. And then go back, I thought we can look at this, what has happened since 1988. You can see the growth, and this was in 2018. 2019 we went higher, in 2020, 2018, 19 we had a little lagging. In 2020 we will have more lagging, and I'll explain why. This goes back historically between 2010 and 2015. Again, automotive was about 37 to 42%, industrial 18 to 24, jewelry 31 to 38, and the investments was 2 to 11. So, like anything else, everything, the pricing is based on supply and demand. So, where's the biggest producer? By far is South Africa. South Africa produces the largest amounts, and consequently, it affects anything happening in South Africa. Any interruption affects the price. So if there's a strike, COVID, something like that happens in the mining, political reasons, that is a big effect on the supply side. Zimbabwe is a big one in Africa. You can see Russia is the second largest, North America, which is the United States and Canada, are the fourth largest producers, and there's other countries that, to a smaller degree, they represent the supply. So the total mining supply is, in this case, 6,094 kilos, but that's not the only supply. What we have recycling, which mainly comes from the auto industry, and what they do, they recycle, and we have 2,165, for a total of 8,259 kilos of production. On the other hand, demand for 2019, as I showed you percentage-wise, came largely from automotive, and it was jewelry and industrial, and the lesser degree was investments. So that represents 84-30. The question is, how do we invest in platinum if we want to? Before I go to the charts, I just want to show you some ideas, and then we can investigate platinum more. You can play the futures market. It's not as liquid as, let's say, gold, and lesser degree silver. So platinum doesn't have the liquidity, but if you ever wanted to play almost 24 hours, it starts 3 o'clock in the afternoon, California time, and it goes to 2:15 p.m. the following day. So it continues till Friday. So you can continuously, except 45 minutes break. If you want to play platinum, as I mentioned, it doesn't have as many contracts. We just had a roll in the contract with platinum. So this is kind of a risky investment, but if you want to be a trader, you could use that. You could also use options and platinum futures. So some of the popular ones are if you want physical investments, you could have bars and coins, which could be American Platinum Eagle, Canadian Platinum Maple Leaf. So you can own that. The problem with that is because of what is happening this year, especially with the gold and silver, the premium, the commissions that the dealers are charging is tremendous. So even if you go on eBay, you might get something attractive, but still there's a big markup. So you just have to be very careful unless you're going to hold on for a long, long time. And, you know, it's not a good thing just for trading, for instance, short-term trading. The most popular way of investing in platinum is through exchange-traded funds. And the biggest one is the PPLT. You can play PPLT if you feel positive about the future of platinum. And if you want to have some alternatives, there's the PLTM, which is less liquid, less volume, and then BBP, which is all the precious metals, including gold and silver, but also has platinum and palladium. So that's the, if you want to have more diverse holding. You can also play closed-end fund if you don't want to be in ETF. This is purely, this is Sprout's platinum fund. So you could actually invest in SPPP, it's purely invest in platinum. If you want to invest in stocks that they produce the miners, the platinum miners, the pure one is PLG, and it's a Canadian company. Then you have the SPSW, which was a Spani, which was bought Stillwater. Stillwater was platinum, and then now SPSW is a South African company, which is owns a lot of gold. So it's a really gold miner, but also does platinum. It's the third largest producer of platinum. So this would be another alternative if you want to have a mix. If you want to invest again, if you want to have, these are South African companies, and what they are traded in, they're pretty liquid overseas, but they are traded on a OTC market. So anytime you see a Y at the end of a symbol or F, that means they are foreign companies traded not on New York Stock Exchange or Amex, but rather in an over-the-counter, like Samsung could be another example. So they're big companies, except because they're over-the-counter, the volume is low. It's very difficult to trade sometimes. You have to call your broker. So, but this is another way if you really want to do pure, as far as a platinum stock, this will be one way. So this is just a few bars or the picture of the coins if you want to own. I thought it would be interesting to see with the regions who owns the most as far as the ETF holdings by the region. By far the biggest one, believe it or not, oh, by the way, this blue line is the price of the platinum, and that's where on this side you can see that's the price, and then this is the holding. So Europe holds the most, and then North America and Africa. So they're the three. Europe by far the largest, and then the tiny little you can see in black is the Asia. They like to own the physical rather than exchange traded funds. Also, Japanese are very keen on platinum. So any activities you see, if Japanese start moving up with the activities, then that will be also helpful as far as predicting the price of platinum. And we will discuss it a little more. So I thought just show you some of these ETFs around the world from Asia. What if you live in Asia, if you want to own the ETF, what you have available. In Europe, what is available, North America and South Africa. So, and this is as of July 31st, 2020. So let's take a look at where we are as far as the platinum. Look at the chart. I go back to 1995 and see what happened. believe it or not, we had the peak in 2008. We went way above where gold was. Platinum used to be selling as a premium to gold. And then obviously you recall what happened in 2008, the financial crisis in 2009. We peaked again in 2011 as gold did, right similar to where gold was. But since then, we've been really consolidating. And I will tell you some of the reasons. So you can see we haven't even gone back above where we were in 2016, 2015. So this is where we are now. Now, whether is this going to be a value or not depends on your interpretation, because I want to compare it to gold. This is where gold was in 2011. We had a support and then we have broken above that. So we are way above platinum. This is where silver is. Again, silver was consolidating. We broke above that and we are way under where we were all-time high in April 24th of 2011. So basically, you can see I put these charts, right? I had my own silver, obviously. I've had it for a long time. $26 was my first target. $30 was my second target. And I believe silver by next year, I think it definitely needs to catch up with gold. So it will continue going up. Of all the metals, I think silver is the most undervalued. So you can see it on a monthly basis, the movement in silver. So we needed to rest, and we've seen the charts in the past. So let's look at, this is from stock charts, this is the actual platinum. You can see we've really been on a weekly basis. We are exactly where we were, where we were a year ago. So this is where platinum is today. This is the ETF of platinum. I also own platinum. I've owned it from a couple of years ago, and I've become more of a trader with it than investors, but I still own some PPLT, and we will discuss what is the future. So I just want to show you the charts, the PPLT gold ratio. As you can see, this is where we were we were up. So platinum was 0.7 or 70% of gold price. Today we are at 47%. So we are undervalued compared to gold. And all of these, as you know, they play the role by dollar. So the dollar is dictating. You can see this is where dollar has been, and because look at what happened the last day, and that was the reason gold went up. We had a nice drop in dollar. So some of the factors for platinum. So one of the reasons platinum has been really been affected on the downside more than, especially in March, and now it hasn't caught up with silver and gold, is mainly the purpose. As we looked at it, platinum is more of an industrial and automotive. So right there, when you look at, first of all, the economy has affected the car producers. Also, a lot more people are not thinking more about talking about Tesla, electric cars. Now, how does that going to affect? When we look at the jewelry part, we look at, again, the biggest attractions comes from India, China, Japan for the jewelry. Now, do we see any weddings in India? So there's no large gatherings. Now, this COVID has affected, again, the demand for jewelry. On the positive note, again, the price is very low. If there was, again, the move in the economy, what's going to happen? Again, the demand, like the retail numbers came last time, and we looked at the ISM numbers. We saw a big move in the car activities, for car purchase activities. So once that starts moving, then there will be more demand. Also, they are working with electrical companies. They are working with the solar system and solar panels. So there is more diversification in platinum. The other thing is, again, with the COVID, now there is going to be, once the economy moves, then the weddings and other things, people will come back to their roots and start purchasing them. So that's the reason you can see this diversion. Again, gold is becoming really like treated like a currency in a sense, like a money. It's a store of really value with the thought of inflation, thought of from the geopolitical to uncertainty around the world. So gold has a different role than silver, and then platinum has a different role. But I would recommend, I'm not managing investments, but if I had, I would have recommended to put down maybe 10% of your investments in commodities and precious metals. And by far gold would be my biggest holding. And then silver, I think more movement in silver, and platinum should play a little role. So that's a good diversification. And these are the ways to go. Okay. This is what gold did, by the way. I just want to show you, this is where that was dollar, this was gold on Friday. Last week we talked about corn, so I thought let's just briefly revisit corn and see how did we do. This is where we were in corn last week. What I thought about, there was that weather problem. We talked about the drought in the Midwest, how that's Monday is going to affect it. So we have broken above the 200-day moving average. So there has been, again, the supply concerns on corn. So that was looking at corn. This was the, if you want to buy the ETF of corn, this is where we were. This is where we are on Friday. If you want to be more diverse and buy the agriculture ETF, that was DBA. So we had a okay run on the DBA. So the reason I show these, again, these are diversifiers. These are something that if you're concerned about the stock market, you think that in the short run or in the long run, you think that things might really overheat it. These are the good times gradually, maybe dollar cost average, put part of your long-term portfolio in places like, again, precious metals, some like agricultures, that they kind of protect you against the dollar, and they also protect you against volatility in the markets. Now, there was a question last week about lumber. Look at what lumber has done. It's unbelievable how beautifully it's holding over its 20-day moving average. Again, we're getting a little away from 20-day, and now we had a bar a week ago exactly, and we did the same thing on Friday, Monday actually. So this is what's happening with lumber. Huge volume came in. The futures, they're not very liquid, unfortunately. So there's a big spread when you want to do futures on lumber. But if you want to do a ETF on lumber and you felt, well, I want to play ETF and I feel it could continue, the symbol is wood. It's only 35,000, but it's actually more than it has been in the past. So it's that's one way of playing, and the other one is cut. And again, it's only 26,000 volume, but you know, we've had some big jumps. So it was just a food for thought. If you were looking at some alternatives, this is one way of doing. And then lumber affects the home builders. So I thought the last chart should be speaking about home builders with the interest rates going up, with the lumber prices changing, would that affect the home builders sector? So you can basically follow this. Just again, it's something for your own research on weekends. All right. We're going to talk about trade of the week. It's going to be a short one, but it's something that I wanted to share. I was asked, you know, maybe just a mini of my thoughts about this investment that I did feel. So I thought let's talk about a trade I did on gold, and I bought options on GLD. And what was my reasoning? This picture was taken on Thursday, so it's not Friday. It's not here because once I did the trade, I'm gonna take a picture of it. And so I looked at gold. Now, a couple of things in the past, when we did analyze gold, we talked about the best days of the week usually are Thursdays and Fridays to buy gold. So for me, my trading is I like to, if it's possible, to do Thursday. Maybe I get out by Monday. So basically I saw that, and I noticed, again, this is when Chairman Powell came. It was a wild day on Thursday, huge up and then down. And these are my linear regression lines. And I noticed we are past the 2 standard deviations. So right around here, I thought we are really undervalued. This is on 15 minutes, but I look at 60 minutes. And I notice, again, the 60 minutes also has gone to that 2 standard deviations. So this was more of, again, technical bounce. So my goal was, I would have been happy to buy here and then go to the mean. So this is what I did. Around 8:30ish, so I bought 5 contracts of $180 gold. And immediately, as you can see, I always put my targets in. That's the lesson. You put your targets. Because these are weekly, I usually do 25, 50. I'm happy if I make 50%. But I always like to have a 100%er. So what I did, I bought the ones, few of them really hit the same day. And I had one left. And as you know, Friday, gold just opened crazy. And so I had bought these about 150. And then it opened at, I had put a sell at $2 on it, but it was at $3.95. So that was $3.25. So it was hit, but look what happened afterwards. I mean, it kept going up. I mean, but so be it. I've mentioned it again, just have to, no regrets, have to just be happy that I was happy I had 150% or whatever it was. Although I could have maybe even doubled more, but doesn't matter. That was the hand held. I mean, it was just great. Look at what happened from this day to that day. I was very happy. As a matter of fact, what I did toward end of the day, it was like 1 minute before closing on Thursday, I bought 5 more contracts at 181. This was at 12:59 and at 6:31. This is 2 minutes, really, when you think about it. I had put all my trades in 25, 50%. So I bought it $1. I had put my trades like at 145, 150, 165, and they all hit at 295. This is where I got hit at 295. Obviously, it went to $4 plus. But this is the reason I did those trades. Didn't have a big exposure. But again, I want to make sure you put your targets in immediately. They were expiring that day, so I didn't want to take any chances. And I usually do one runner, but I didn't realize it's going to hit the first minute. I usually like to get out of 4 and then have 1, but I thought my last one will not be hit and I can play with it, but obviously it did. So this was the trade that I did. So I thought to share with you why I played the gold. And it's very liquid. The options are pretty liquid. I usually like to play weekly on them. So this is a food for thought. One interesting thing, we talked a couple of weeks ago, it's about, we talked about pinning. So this is what happened. This is the Apple's, I looked at the 60 minutes and we look at, this is what happened Monday. We've gone up to 515. This is what is actually here. So we've gone from 462 up to 515, right? That's the range of Apple last week. We talked about max pain, and I want to share with you that how the pinning in reality works. And this is Apple. Let's look at Apple. Again, you can use the max pain option site, or I just like to do things manually. I always done manually for years. And Apple and again, Tesla is not a good one, but Apple, Netflix, Facebook, they're usually more predictable. Expedia used to be. So we look at the open interest. I look at the largest total open interest. And why do we look at that? Is that's where the market makers inflict the biggest pain on the option holders. So we can see the largest was at 500. And guess where Apple closed? Actually, Apple closed at $4.99 and 18 cents. This is after hours at 5:01. So basically, it was pinned at about 500. So you could have seen this beginning of the week, and you could either play the options, or if you were thinking of playing short term and thinking, should I buy, should I get out at 515? Maybe it's a good idea, or 450, 480, 470, is that a good time to get in and play? So these pinnings that you've heard, this is how that works in reality. Since I have this, and you can see the after hours, I know I'm very conservative, cautious about, especially when you have like selling either calls or puts, especially let's say puts. And I've said it before, like on a weekly, and I know the question has come out that, listen, you know, I say get out before all the option expiration. I know the 4:00 p.m. or 1 o'clock our time in California, 1 p.m. is the time that the markets close, and you'd say, well, you know, it's going to expire. So why should I sell it at 5 cents? Why should I buy it back at 5 or 10 cents or 20 cents? One of the reasons is, although it's, again, technically it closed at 4, you always have the other side, and the other side has the right to exercise. So what happens, a lot of brokers, I use TradeStation, is open till 4:30. They allow you to exercise till 4:30. Some other brokers, they actually have till 5:30. I'm talking about New York time, or in our case, 1:30 and 2:30. So what happens if you're even 1 penny in, let's say, above the price, then you're in the money and it's gonna be exercised. So let's say you sold something, you sold a put, and it is, you know, it was almost worthless at that time. You're celebrating, and 5 minutes later, the other side decided that they know something. I don't know, they heard something that they felt the stock. Let's say you have done sold a call, for instance, and the other side thinks that the market is going to go up 30 points a stock. They have the right to exercise this. So even though the markets are actually closed, the other side has the right to exercise it till, again, New York time. Depending on your broker, they can call and say, I want to exercise it like 1:15 p.m. Pacific time, or like 1:29. And all of a sudden, you really, now you have to either deliver or you have to purchase it. So that's the reason, again, being so cautious in that sense. I don't like surprises. I've had many investors I've seen that they have had, unfortunately, of losing a lot of money just because they want to grab last 10 cents or 5 cents out of their options. So especially if they're naked, it's not fun. Anyway, I thought I explained that because it has happened. One last thing I will share with you every week. I'd like to, just a brief thing on Apple as we're talking. This is Jake Bernstein. He's been in futures trading. He's a father of seasonality. He's written tons of books. I mean, he's been doing this for 50 years. Interesting character. I've met him many times. He lives actually in Orange County, and very interesting. He's done a lot of studies, does a lot of system trading. So he comes out with a lot of different ideas. But he's a big advocate of, he doesn't look at like the way we look at moving averages. He's been a big advocate of, he looks at the high of moving averages. He looks at the low of, he looks at the open and close. So I thought to share this with you. I don't want to bombard with too many things, my apologies, but this is something interesting if you want to play on your own. What this is on a weekly basis. He recommends using it on a weekly basis. So the green line is the 8-week moving average opening. So this is the open, and the red is the close. So as you know, our moving averages, we always use the close. He's using the opening to compare beginning of the week and the end of the week. He wants to see, is there any divergences and if there is any confirmation. So basically, as long as the green line is above the red, then we are in a positive trend and the markets are good to go. When there is a little cross, then he feels that there's, and it makes sense, right? But it's just being visual. It kind of keeps you longer and lets you out sooner than other, just the moving averages. It just gives you the confirmation. I just thought to share with you. Every week I like to share something new. So anyway, and that's that about. So let's talk about expected move. As you know, I mean, it was a wild week last week. We had a nice up week. So this week's expected move is 62 points for S&P. And then before last week, the prior 2 weeks, we were within the range. And last week, we just went, from Sunday night, and we just went completely outside the range. We were at plus 50. We went double that. So we are getting a little volatility here. But this is what the markets, the market makers, the options, they look at and they think that we're going to be up 62 points for the week. All right, so some final thoughts. And again, I'm so grateful that you're a part of this family. And my whole goal is it's creating an environment that I mentioned is educational, but something that you can actually use that education to apply it, becomes application, and that application becomes really inspiration. And that's when you can share. This is something is not just, hints, so you can go buy something and then sell it and make money, which is, it's important. But my ultimate goal is not that. And I thought, let's talk about, just for a few minutes, about purpose. As you know, it's like, I've shared that before. I really liked going to school. I enjoyed learning, and it just something happened since I was a child. I loved reading, and I always loved learning. But the thing that when I went to school, one thing I never understood, although I was good at taking tests, I did not know why I'm taking these classes or the courses and why they're teaching me the history of 2,000 years ago. I'm taking chemistry, and the petri dish, we're looking at the cultures, and there was always, I was told that you do this and, I get a good grade. Once I took my test, I'm done. But the teachers never, and I see that with our education system, they never tell us what is the purpose of doing this. Why am I, again, talking about geography? What am I going to get out of this? And I think having purpose in life is lifeblood. I mean, that's something I'm hoping to create, that we have a purpose. And I wake up like at 5:30. I can't wait to see what the markets are doing. It's like a mystery. And this is the goal. I'm hoping with this newfound something, I'm hoping that it's not, again, it's like a single dimensional. It's a bigger purpose in attending, joining us, being together. There's a bigger picture in that. It's that, money is part of it. We hear a lot about motivations. You have a lot of motivational speakers, you have CDs, books, videos. But motivation is almost like a sugar high, in my opinion. Motivation could be internal, like let's say I want to go on diet and look really good, or I want to be wealthy so I can impress others, or somebody always told me I was never good enough, I want to prove them wrong. But once you start, after a while, it loses the effects. Externally, we have these motivations because if I don't do the taxes legally, they can come and say, you're going to pay penalties. So it's like avoiding the pain. Or if I got a good grade, they're going to say, well, I was a good student, or how wonderful that is. So that's external motivation. And sometimes we have circumstantial, the peer pressure or things that so we want to look good and for the reasons, or when there's a fundraising, you go to an auction, everybody's bidding, we don't even know what we are bidding, but we want to look good for them. So that motivation is not really real. It's the aspiration and inspiration. So my whole goal is, I'm hoping again, and I hope the next few months and years this will continue, that we become like ultimate educational institution, in a sense, that hopefully bring our youth to understand that not only the world of economy, but the philosophy of life, and why even we need money for what purpose. So with that in mind, I really appreciate your attention. And again, my purpose is about my values, my mission, my vision, and that's what my whole goal is. So with that in mind, I really appreciate, this is our website. Thank you so much. And Sean, we can stop recording and open for the questions. Thank you so much. Thank you.